All right, guys, welcome to the video on exactly how to pass a prop firm challenge. Again, perform this at your own risk, but I'm going to show you a very simple and easy way to pass prop firm challenges. There's a ton of videos out there on how to pass prop firm challenges, but I'm going to share the way we do it and the way I think it should be done very, very easily. So if you're having an issue passing prop firm challenges, this should hopefully help you out. But this is not financial advice, of course. All right, so what we have here is we have a candlestick chart. And the best way to do this, I'm in replay mode on TradingView. But let me go over to random.org and I'm going to select two random dates here. Pick two random dates between February and March. And let's get the dates. All right, so let's see, it gave us February the 19th and March the 20th. So let's go over here and let's select those dates, February the 19th. All right. All right, so let's look at this date first. This is February the 19th. Where is the market? Let's see. Let's just. All right. So as you can see on the chart, and I'll explain this very quickly, and then we'll jump right into the strategy. As you can see on the chart, there's a shaded area here, dotted lines in between the shaded area. This represents, or this indicator was actually created using AI. And make sure you guys subscribe and check the comments of this video if you want to see exactly how I created this indicator using AI. I'm going to create a video and I will come back to this video and post a link to that video um, in the comment section. So again, this was created using AI. This takes into account the ATR and a few other things. But for this particular strategy, what we're going to do is we are going to wait for the um, candle to close above the middle point and not above or below uh, the ATR. And then we're going to get into the trade to take it to the ATR or beyond. And the principle behind the strategy is the ATR is the average true range. So for example, if we look at the distance between this candle or this dot and this dot, this is the average range of the candles here. So the candle would be, the average range of the candle is about, this size right here. That's the average range of the candle. Um, so what we want to do is we want to, get this out the way here. We want to wait for price to close above the middle point here, and then we want to catch price as it throws itself back to the other side of the ATR or beyond. And when we do this, we only want to risk, we'll only risk 10 points. Okay, we're only risk 10 points here, and the goal is to make 20 points. That is going to be our risk. And this strategy, we will start it at 5 a.m. in the morning. So this is 5/19 right here, or 2/19 right here, February the 19th, which is one of the dates the um, random date generator gave us. All right, so this is the 5 a.m. candle where we are on a 2-minute chart. And let's kind of bring this up a little bit. If you stretch this out long enough or big enough, you'll be able to see the different, you'll be able to see what the verbiage says here. All right, we don't need the verbiage on the chart. What we want to do here, starting at 5 a.m., we want to wait for the candle to close. And this would have been 2 minutes earlier. It actually played out, but we'll find another example here in just a minute. But as you can see, the candle closed below the midpoint of this ATR range. And if we would have entered right when that candle closed or waited for a slight pullback, we could have easily got our 20 points here. And if you do that once or twice, you can do it once or twice over the course of a few days, then you will see that you can easily pass prop firm challenges. We use another strategy for payouts, but this is one of the easiest strategies to pass a prop firm challenge, in my opinion. All right, so let's go forward here, and we'll just use this to go forward. Right. Okay. So this doesn't necessarily qualify because it closed right at the midpoint here. We want it to close slightly above, and we do not want it to close too close to the other end of the ATR. So now we're looking for an entry. All right. So let's see here. All right. So it would have played out, but this is not what we're looking for. So it's okay. All right. So here is it closed slightly below right here. So now what we want to do is we want to go and place a short position, and again we would risk only 10 points. Usually you can risk 8 points if you want to. Actually it's less than that, but we'll risk 8 points here, and the goal here is to, now let's just risk the 20 points like we talked about. A lot of times if you see me trade live, you'll see me risk 7-8 points, but for the sake of this video we will risk 20 points, or we will risk 10 points with the expectation of making 20 points. All right, so there's a 20 mark there. If it moves up in this area right here, we will move we would probably, if you were trading this live, we would move a stop right around this area right here, which would be, let's see, maybe it would be 10 points here. 10 points is right around this area. So if we got down here, we would move it 10 points in profit, just because if you notice, we have a lot of wicks down in this area. So these are potential reversal points right here. So want to be careful there. Anyway, it should grab the 20 points. All right. So here we are right here. So let's play it forward. Okay. We are not in the trade just yet, by the way. We are not in the trade. Maybe in the maybe in the trade here. I can't really tell here. Yeah, possibly we are in the trade right here. All right, so we'll just play it forward, and here we go right here. As you can see, the market spiked all the way down to this point right here, which was here. Let's just play it forward. All right, and then we'll talk about what could have potentially happened here if it doesn't hit. Okay, so it did hit here. All right, so as you can see, it worked out perfectly. When the market got down to this level, we probably would have took, let's see what that would have been. We probably would have ended up with 10 points on this trade. Not quite. We wanted to at least, go down to this level right here, which is a potential bounce point, which it did bounce at this level right here. Or you can just let it play out. But if this is, it depends on how much money you're actually risking. This is a winner, so let's just kind of make that smaller here. All right, so let's look for another trade. The market has given us what we were looking for here. Now we're waiting for the market to come up over the midpoint and trade it up, or um, do something weird and come down. So we'll just wait to see what happens. The ATR here, or the average true range here, is not very wide. So as this popped up over and closed, you can see this kind of, it didn't leave a whole lot of room between here and the ATR, which is fine, but it's just a lower or lesser probability trade. This may pop back down. So let's see. All right, so we'll just be very cautious. So let's say we risk 7 points on this, and let's say we're looking to grab 10 points. And the reason we're doing that is because we've already grabbed 20 points over here, and we're only risking 7 of those 20 points to try to potentially gain 20 more points or 10 more points. All right, so we're clearly in this trade, and then it just took off from there. Um, excellent example. However, this does kind of raise caution, but again, it played out. All right. All right. So let's look at another day here, because days are different, right? I mean, who knows? Maybe that day was we just got lucky. All right. So let's look at the date, 3/20. So let's select the date. All right, again, we're going to go to 5 a.m. in the morning. Now, I've not looked at these before. I've not looked at any days before. We randomly generated. I'm not doing multiple takes of a video. This is um, what it is. First shot looking at this, not the strategy, but looking at these dates. Have not traded these dates or played around with these dates before prior to the video. It's just raw what it looks like. This is exactly what it looks like. And I'm showing you guys this because this strategy, um, this is how it works. And it usually play out. It doesn't always play out. You know, I've back tested this and there have been losses. But usually a loss comes with the second trade. So what will happen is you'll win the first trade, the second trade will be a loss, and then the third and fourth trade will be a win. And I don't trade this more than 4 times per day. And also, if there's ever a point where you trade the strategy and it loses twice, let's just say you're using the strategy for something other than a trading challenge, then if you trade it twice, you definitely want to stop trading it. And that's why I don't recommend going all in on the combines on the first try, because you don't have to do that. I mean, you can trade 20 or one contract, which is worth 20 points on NQ, and you can get one trade or two trades. Each trade is worth 400 bucks. And then when you lose, you can only lose 8 points. You would only lose 8 points, set it at 7 or 8, and you would lose 160. So you can just trade this 1 or 2 times a day. And if you're looking for $3,000 divided by, let's just say you just take one trade per day, 400, you can pass this in about 2 weeks, really a week and a half. Um, so, and that's low risk, not rushed. All right, so let's take a look at this. It's at 5 a.m. We are March 20th. Yep, there was our date. Let's go forward here. The ATR is very tight here. The range is very tight. See how tight the range is here? This dot to this dot, very tight. So may not be the best day for this particular strategy. All right, we're getting close. Okay, so this is a lot better. Kind of gave us somewhat of a confirmation because it closed above the midpoint. You have the ATR or the range actually widening a little bit. Again, long position. We will get in here and let's see what happens. I probably would leave this at, I would have to do this at 10 just because the markets, the swings are very, very large here. And then well, not 62, we'll go, and I just feel like this is going to swing lower, a lot lower, and go a lot higher just because the market is very volatile. So you can choose to skip these days. You can use a strategy, but if the market I mean, from 5 o'clock, it pushed all the way down here. And then, it kind of started to chop around here. Then it's starting to kind of go up just a little bit. You can choose to skip these days if it's too volatile, or you can just stick to the strategy and anticipate a potential loss. All right, but if you're trading a strategy, this is the setup right here. The ATR, the midpoint, it needs to pass or close above both of these midpoint lines here, and then get in for a long 20 points with a stop at 10 or between 7 and 10 points. All right, let's see what happens here. We're definitely in the trade. Got in the trade here, moved down just a little bit, pushed up. And at this point, this is it's actually pretty good. 11 points, 12 points. All right. All right. See here, we're still in the trade. At this point, um, it's looking good, but I can't tell you if I'm trading, depending on if you're trading very heavy, it's best to take the 10 points. If you're not trading as heavy, definitely stay in because this thing may rip back up to the top here. All right. and that's a trade right there. Definitely closed above the target here, and definitely probably will push higher. All right, so you can see what happened there. This went as high as 47 points, and that is a strategy, and that is how we do it. Again, if you want this particular indicator, this was actually created using AI. I'm going to create a video on exactly how I created this indicator using AI, or how you can create your own indicator using AI. Please subscribe to the channel, to the YouTube channel, and use this strategy at your own risk. Thank you guys for watching, and be sure to subscribe and like the video. And leave me a comment. Let me know what you think about the indicator. Please leave me a comment. Let me know what you think.